Did you know that XRP has skyrocketed in Google Trends, hitting levels that it's not seen since the 2021 bull market? And that's not all. Its price is climbing faster than your favorite meme coin on a caffeine rush. In today's video, we're diving deep into XRP's jaw-dropping price surge, its newfounded fame on Google Trends, and what this could mean for the cryptocurrency market moving forward. Whether you're an XRP holder, a crypto enthusiast, or just crypto curious, stick around because this news is something that you don't want to miss. $1.27 for XRP. That's right. XRP has blasted past that $1 mark, reaching levels that it hasn't seen since November 2021. But what's fueling this rally? XRP's price recently hit $1.26.96, according to Binance, doubling in just 7 days. This surge has also solidified its position as a staggering $30 billion market cap, making it one of the top players in the crypto space once again. So why now? Many analysts believe this rally stems from a combination of factors: undervaluation. XRP has long been underestimated, especially after years of legal battles with the SEC. Regulatory clarity. As the US inches closer to clearer crypto regulations, XRP could emerge as a major beneficiary. And market sentiment. There's a palatable shift in how the market perceives XRP, and the numbers don't lie. So what do you think? Is XRP's surge purely hype, or is this the start of something much bigger? Let me know your thoughts in the comments down below. Now, XRP isn't just climbing the price charts, it's trending like crazy on Google. But why does this matter? According to Google Trends, XRP's surge interest has hit highs not seen since the last peak of the 2021 bull market. Now, back then, the crypto world was on fire with $40 billion meme coins and celebrity NFT buys. Now, XRP is stealing the spotlight once again. This surge in search volume is more than just a curiosity. It's a potential indicator of a broader market trend. Historical context: in 2021, similar spikes in search interest preceded massive bull runs for Bitcoin, Ethereum, and yes, XRP itself. Current implications, right? So increased search activity often correlates with higher retail investor interest, which could mean more capital flowing into XRP. The last time that XRP trended this high, Shiba Inu and Bored Ape Yacht Club were the talk of the town. Who knew that XRP would make such a dramatic comeback? Do you think that the Google Trends is a reliable indicator for crypto price action? Drop your thoughts below. Is XRP paving a way or the way forward to the next bull market, or is this just sprinting ahead of the pack? Now, the big question that everyone's asking really is this the beginning of a prolonged rally for XRP and the crypto market, or is XRP's rapid rise just about to come to an end? Now, bear with me because I will get into my technical analysis towards the end of the video, where I'll be sharing where I think the price action is going. But let's talk about the bullish case. Regulatory clarity in the US could spark a domino effect, with XRP leading the charge into broader kind of bull market. Of course, you can't have a bullish case without a bearish one, and some skeptics argue that XRP's price surge might be a short-term pump, cautioning investors against FOMO. That's the fear of missing out. Now, John Deaton, a pro-XRP lawyer, has highlighted the importance of the upcoming decisions around the SEC leadership, and we'll talk about that in more detail in a moment. Regulatory changes could dramatically shift the landscape for XRP and other cryptocurrencies. If history is any guide, XRP's resurgence could signal a broader trend for the crypto market in 2025. Remember, Bitcoin halving is just around, or just happened last year, or this year, I should say, April, and we all know that that tends to shake things up a little bit. Now, what is your prediction? Are we on the verge of a 2025 mega bull run, or is XRP's momentum going to fizzle out? Let us know. Now, Today, we're going to explore XRP's explosive price surge, its breakdown or breakout on Google trends, and what all this means for the crypto market. And of course, whether you're a fan of XRP or just watching from the sidelines, one thing is for sure that this is a moment to be paying attention to. Could XRP be the spark that ignites the next crypto bull run? Only time will tell. But one thing's clear, the crypto market is heating up and you don't want to miss out. Did you know that the future of cryptocurrency regulation might hinge on a single candidate's past actions? Well, let's unpack the recent tensions in the SEC leadership race and what it means for the crypto community. Imagine having a key player in the crypto world publicly challenging a top regulatory figure. That's exactly what's happening as 𝗕𝗘𝗪𝗔𝗥𝗘, the Ripple's chief legal officer, throws shade on Bob Stebbins, a leading candidate or contender, I should say, to replace SEC Chair Gary Gensler. But why is this so significant? Well, Stewart didn't hold back. He pointed out that Stebbins was involved in crafting the infamous Hinman speech back in 2018, where Ethereum was declared a non-security. This move was a game changer for Ethereum, but it also set the stage for future regulatory battles. By bringing up the Hinman speech, Stewart is essentially questioning Stebbins' credibility and intentions when it comes to crypto regulation. It's a bold move that signals potential friction between Ripple and the SEC's future direction. So, what does this mean for Ripple and the broader crypto market? Let's dig a little bit deeper. Now, Bob Stebbins isn't new to the spotlight. As the former SEC General Counsel, he played a pivotal role in shaping the agency's stance on cryptocurrencies. His involvement in the Hinman speech has both supporters and critics in the crypto community. Stebbins has approved approximately 80 cryptocurrency-related enforcement actions, according to former SEC official John Reed Stark. This track record has earned him both respect and resentment among crypto advocates. Furthermore, his association with former SEC Chair Jay Clayton adds another layer of complexity. Clayton is known for initiating the lawsuit against Ripple during his tenure, making any potential collaboration between Clayton and Stebbins a point of contention. Cryptocurrency attorney John Deaton went as far as to label Stebbins as Clayton 2.0 in terms of his regulatory approach. This suggests a continuation of stringent crypto regulations, which many in the crypto space fear could stifle innovation. Choosing Stebbins could mean a return to aggressive regulatory measures, something that the crypto community is keen to avoid. But how does Stebbins compare to the other contenders? Let's take a look. Bob Stebbins isn't the only name in the race to replace Gary Gensler. Let's meet the other top contenders eyeing for the SEC chair position. First up, we've got Daniel Gallagher, Robinhood's top lawyer. With his background in consumer protection and financial regulations, Daniel brings a perspective kind of focused on investor rights and market transparency. Next, we have Brad Bondi from Paul Hastings, known for his expertise in securities laws and corporate governance. Now, Brad approach is expected to balance regulatory oversight with fostering innovation in the financial markets. And then we have Paul Atkins, CEO of Pantomark Global Partners. Atkins, or Paul I should say, is recognized for his work in financial technology and strategic advisory, potentially positioning him as a tech-savvy leader for the SEC. Now, each candidate brings something unique to the table, and their leadership styles could significantly influence the future of cryptocurrency regulation. With Stebbins represents a more traditional, enforcement-heavy approach, the others may advocate for a more balanced or tech-friendly regulatory framework. So, Who do you think is best suited to lead the SEC in the next era of crypto regulation? Let me know your thoughts in the comments down below. The SEC chair has a profound impact on the cryptocurrency market. Let's explore what each potential leader could mean for your favorite digital assets. If Stebbins secures the position, we might see continued strict enforcement actions, potentially limiting the growth and adoption of cryptocurrencies. This could lead to increased market volatility and investor uncertainty. On the other hand, candidates like Daniel or Paul might pursue a more balanced approach, fostering innovation while ensuring consumer protection. This could lead to a more stable and investor-friendly environment, encouraging wider adoption of crypto technologies. Experts are divided on what direction the SEC should take. Some argue that stringent regulations are necessary to prevent fraud and protect investors, while others believe that over-regulation could hinder the growth of the crypto industry. Regardless of who wins, one thing is clear: the SEC's next chair will play a crucial role in shaping the future of cryptocurrency. As investors and enthusiasts, it's important to stay informed about these developments, as it's essential for making more strategic decisions and investments. Did you know that XRP ETP just crossed the $100 million mark in assets under management? That's right, a major milestone in the crypto world. Imagine investing in a cryptocurrency product that's just surpassed $100 million in assets under management. It sounds impressive, right? Well, that's exactly what's happened here with the 21 shares Ripple XRP ETP, that's a XRP, launched back in April of 2019. This particular product is fully backed by the XRP cryptocurrency and has been steadily gaining traction. But what does this milestone mean for the crypto market? Well, let's break it down. Reaching over $100 million in AUM signifies a strong investor confidence and growing adoption of XRP as a viable asset. It also positions 21 shares as a key player in the European crypto ETP space, alongside other firms like CoinShares. Now, this achievement not only highlights XRP's resilience, but also sets the stage for more institutional investment in the future. As the crypto market matures, milestones like these are crucial indicators of where the market is headed. Now, that's not all. The XRP ETF race is, or at least in the United States, is underway and it is intensifying. Earlier this month, 21 shares jumped into the fray by submitting their XRP ETF proposal to the SEC. This move follows Bitwise and Canary Capital, who have also filed their retrospective XRP ETF applications. So why is this significant? An approved XRP ETF in the United States could open the floodgates for mainstream adoption, allowing more investors to gain exposure to XRP without directly holding the cryptocurrency. Ripple CEO Brad Garlinghouse has been vocal about his belief that an XRP ETF is inevitable, but as some experts caution, the SEC's approval process can be unpredictable and may take time. According to pro-crypto attorney Jeremy Hogan, the biggest risk factor for these ETF filings is the SEC itself. In Bitwise's October XRP ETF filing, they highlighted the SEC as a major hurdle. This means that while the race is heating up, regulatory roadblocks remain a significant challenge. Now, let's talk about XRP's recent performance. Over the past week, XRP has surged by more than 80%, reaching its highest level since November 2021. What's driving this massive rally? Well, there's several factors at play, including persistent rumors about an imminent resignation of the SEC chair Gary Gensler and expectations of a more relaxed regulatory environment in the United States. These developments have sparked optimism among investors, pushing XRP's price to new heights. Despite giving up some of its gains, XRP remains in its 6th place by market capitalization, according to CoinGecko data. This strong performance underscores the token's potential and the market's bullish sentiment. But What does this mean for the future? If the regulatory environment becomes more favorable, we could see even more significant gains and broader adoption of XRP in various financial products. To get a better understanding of where the crypto market is heading, let's hear from some experts. So we've got Ripple CEO Brad Garlinghouse, who remains optimistic, predicting that an XRP ETF will soon be approved in the United States. He believes that the regulatory landscape is shifting in favor of crypto innovations. On the other hand, some experts are more cautious. You've got Jeremy Hogan, who points out that the SEC stance remains a significant barrier. He suggests that Bitwise's XRP ETF filing might need to be amended to address SEC concerns, indicating that that approval may not be that imminent. So what does this leave us, retail investors? It's a mixed bag, actually, of optimism and caution. While the market sentiment is bullish, regulatory uncertainties still pose challenges. However, the momentum is undeniable, and XRP is positioning itself as a key player in the evolving crypto landscape. So, what do you think about XRP's latest achievements and the potential for a US ETF? Drop your thoughts in the comments down below. We would love to hear from you. Now, let's go ahead and jump down into TradingView and take a look at my XRP technical analysis, where I'll share my thoughts on the recent XRP price action. Okay, guys, here we have XRP paired up with USDT. We're on the 1-day Binance chart here. And first of all, I'd like to apologize. I am under the weather. I'm ill, probably COVID or something like that. It's a bit of a struggle to kind of get all this video content sorted. So you may have noticed in the first part of the video that it's a bit of a challenge. I'm going a little bit slower than normal. So this section obviously is a longer section. It's not cut up or anything. So I may cough, sneeze, and all the usual kind of stuff, and just go a little bit slower. So I apologize for that to start with, but let's take a look at what's going on here. So for a little while, we were talking about 75 to 85 cents, and this is a target that we've been kind of speaking about for what feels like a very long time, and we just blasted straight through it, which is a fantastic move. Now, a lot of you guys know, if you've been keeping up to date with everything that I've been talking about, $1.04.12 was our 1.618 target here. This was a major milestone for XRP's price. This basically meant that we were not in some kind of weak move to the upside. Instead, we have started to really kind of ramp up and are now trending to the upside according to Elliott Wave. A 1.618 move is a critical move for XRP because it labels us in these bigger impulsive structures, okay? So you can see here that we were tracking these kind of 5-wave movements. Our wave 3 is significantly higher than we were anticipating. Okay, this is a wave 4 that we're currently in, and I still see this as another wave 5 to come. This is all a part of a wave 3. I'm going to sneeze in a minute, and if I forget to edit that out, I do apologize. I hate editing, so if I do sneeze out, it's going to be that. So as you can kind of see here, right, we have the wave 3, the wave 4, and then the wave 5. That's all going to mark up a wave 3. So let's go ahead and take a closer look at this most recent move here, right? So because we breached quite high, we rallied up to 126.98 here on the USDT pairing on Binance. We had a good retracement, and we started to see a little bit of recovery. Now, what we want to know within this data is whether or not there's still further retracement in the wave 4, or whether or not we have this move to the upside. So the first thing that we need to do is we need to ascertain the wave 3 here, okay, and we need to know whether or not we are retracing to its typical area to start with. Okay, so the typical area of retracement is 38.2%, or the equivalent of basically 38.2% would be down here at 87.99 cents. But you can see that we're reacting quite nicely at the moment to the 236, and that's actually coming in at $1.01. Okay, so that's actually holding up quite well. So I'm not too concerned about that. We do have the potential for 88 cents. So let's jump this down into a 1-hour time frame, just so that we can see what's going on with this correction at the moment. You can see here the hourly 50 EMA and 50 SMAs are holding up as key support areas. You can see here we have a 3-wave correction. So with this move to the upside, we need to know is, did we come down first before going up, or did we go up before coming down? So for that, we'll jump to a 15-minute time frame, and here we can see that it hasn't helped us. 5-minute time frame. We have to just know which direction this went in. So again, not helpful. We'll go to a 1-minute time frame. We need to know this is a key piece of data for us. So as we kind of come in here, we can see that we went up before going down, and that's exactly what we want to see. So let's come back to our hourly chart here. I'm just going to go ahead and auto correct that. So that means that we went up before going down. And that's important because this means that our correction is in the direction that we wanted it to be. So we go down, we then bounce up, okay, and then we come back down again, and that's a three-wave structure. Okay, if we went the other way, we went down before going up, then our correction actually starts here, and then we can actually see further downside. But because we have the high first, then we have the low, we have a lower high, and then a lower low, we basically complete the structure. Okay, it's important to do that sense check and that due diligence. The other piece of due diligence that we have to do here is we have to measure the distances between that high and that low, and move it over to the bounce, and then see whether we came right into the typical range of expectation. We actually haven't, so we are a little bit shallow on this. Okay, so targeted range would actually be a little bit deeper. We would be looking between 92.32 and 97.26.
Are you ready for the biggest trading competition of the year? Blowfin is bringing you the chance to dive into a massive prize pool of up to $1 million. This is your chance to win big while trading your favorite cryptocurrencies, but you need to act fast and sign up using the special link in the description. Blowfin's latest trading competition offers a total prize pool of up to $1 million, and it's packed with rewards for both team and individual traders. Whether you love competing in teams or prefer to go solo, there are plenty of ways to win. The event is broken down into exciting competitions like team trading volume, team P&Ls, individual trading volume, and individual P&L percentages, so there's something for everyone. Here's what you need to do to get started. Step 1. Register for the event using the special link in the description before November 21st, 1200 hours UTC. Step 2. Start trading during the competition period, which runs between November 12th and December 12th at 1200 hours UTC. Step 3. Compete in team challenges or individual contests and rank for your share of that $1 million prize pool. Let's break it down quickly. 40% of the prize pool is allocated to the top teams by trading volume. 35% goes to the teams by P&L percentage, that's profit and loss percentage. 15% is set aside for the top individual traders by volume, and the remaining 10% is for individual P&L percentage winners. To join the team competitions, your team must have at least 10 members, including the captain. But don't worry, if you use the link in the description down below, you can join the Cheeky Crypto team, and we already have more than 10 members, so don't worry. You can still participate in the individual competitions as well. Keep in mind that each user needs at least 10,000 USDT in trading volume to qualify for rewards. That sounds like a lot, but it's actually a lot easier to achieve 10,000 USDT in trading volume than you might believe. Worth checking it out. Now, don't miss out on this incredible chance to win a share of that $1 million. Click the link in the description below to sign up, join the competition, and start trading today. Remember, registration ends on November 23rd, so don't wait too long. This trading competition is brought to you by Blowfin. It is not affiliated with Cheeky Crypto or YouTube in any way, shape, or form. It is solely the responsibility of Blowfin. All terms and conditions can be found on the Blowfin website using the link in the description down below.
So I'm going to go ahead and put a little yellow box right inside here, like I normally do, and this is because this is an area of it's still an area of focus. Okay, so it's possible that maybe we just reacted to the 882, but unfortunately we have a corrective move here, potentially a little push up, and still correction. So we can't rule this idea out just yet. Okay, so a potential move down a little towards the 200 hourly EMA is something that we need to contend with or think about. Our histogram here is also very interesting. It's showing weakness across the board. So this is a strong area for a breakout, in my opinion. So this is what we were witnessing before, right? We're basically getting things wedged up. So basically there's a lack of buying appetite as we push up. There's also a lack of selling appetite as we're pushing on down. So again, it's showing us that there's a potential for another move to the upside, in my opinion, from the MACD histograms. Turn that off, bring in the stochastic RSI here on the 1 hour time frame. We're going to see some volatility, so we're not too concerned about that. Let's roll this back up into our daily time frame. Okay, so what that means is we still have the potential for a deeper correction here before getting into that final fifth wave move. So for the purpose of this, we will be conservative on our fifth wave targets. Okay, we will be looking for a conservative range between 134 and 146 to complete out the fifth wave, which will complete out a third wave. Okay, so we do look for that, but taking a look at our data and our charts, we actually would be thinking about another retracement for entering into long positions. Okay, so we're getting close to it. We're not yet there. I mean, we can enter here if we want to, give ourselves some broader space, but we're not going to have a good risk reward ratio on that. So we're going to wait and for a better entry, because I do think we're going to see one, even if it is just testing out the previous low at around $1. We can give ourselves a little bit of breathing room here. Lower than 85 or around 85.5 would be fine. Then go for a 1.5 risk reward ratio or beta. So in this particular case, if we were to enter around $1, put a stop loss at 85.53, and put a take profit at $1.34.55, it's a 2.33 risk reward ratio. That to me seems to be a pretty reasonable play. I think that's what we look for. Once we hit these higher ranges, we can go short, but we're trending to the upside, so we don't really want to do that unless we use proper risk management and we track an internal 5-wave move. So we'll be looking for a 5-wave move here. We get confirmed 5th wave move completing, then we might want to go short, stop loss nice and tight, and we look for coming back down to the previous area of retest for whenever wave 4. We could do that. We might look at that closer to the time, but going short whilst trending up is not the best move. We do expect an additional wave 5 later, so again, we don't want to go short unless there's an absolute key reason to do so. Now, taking a look at our stochastic, it is high, it is correcting down, so again, it's looking good for a correction here. This could be a good setup for us a little bit further down the line. We're oversold on the 4-hour time frame, so we are looking for a bit of a lift in the price action. Bringing in the MACD histogram here, guys, you can really see how that broke out fantastically from our wedge. So bring this into view here. What we were tracking was this big kind of consolidation phase coming in across the buying and the selling, and we were looking for a big breakout. Obviously, the US election was the catalyst for that. Couple that with everything else that's been going on, and we have a great move to the upside here. So this is something that we've kind of been monitoring. We were looking for only 85 cents, so the breakout above $1.04 is a fantastic move in my opinion. The relative strength index is overbought, so we are going to be looking for a cooling off, but we're heavily in kind of bullish sentiment, greedy sentiment. So again, we will be looking for a distribution event soon. I do think that is likely to happen, and a nice kind of corrective pattern will appear, and that's going to basically be kind of a cooling off that's needed to gear us up for the next big move. Okay, so on XRP here, zooming out, you can see this broader target that we had between 124.71 and 165.05. I think we did that in the last video, and we are still tracking nicely for that. Okay, so it comes on to this idea of our kind of structures here. Now we are, of course, hopeful that maybe we can get a bigger breakout of this as well. A 5-wave move like this is still in the corrective area. Now, is it possible that there's something else going on? I've kind of scrutinized this area quite a bit, trying to figure out whether we could argue it's a wave 1 and stuff like that. I don't see it. So I'd love to be wrong, but I just don't see a longer term trend to the upside. But anything above 255.99 is going to be another 1.618 breakout. So again, I'm going to label that up with our 1.618 label, put that in there. That's going to be a key area for us as well. So we're going to be looking basically for 256 on that. 256 is going to be an area where we can see, in my opinion, significant amount of growth taking us out towards our 559 to 1125 target for XRP. So there's a lot of stuff going on, lots of positivity within the price action. Nothing to really be too concerned with. I mean, there's going to be a few corrections on this journey for sure as we kind of continue the path to the upside after the breakout. In a very much a similar way that we saw this move up here into that 93.8 cent area way back in 2023. The correction down into our accumulation range, down here in the lower range between 33.46 and 46.16. Yes, we didn't get to the lower ranges, and then we were only really down here for a couple of days to take advantage of these accumulations. But it's great breakout. We've smashed past previous resistances across the board and across the previous wick highs and across the 1.618, and we are now up in that target range 124.71 to 165. From here, we do expect a reversal. That reversal is going to be a reset. So like I say, I think this is a 3-wave structure that's actually going to be a part of a bigger play. So we'll look at this as a kind of like a big A wave. We'll have a correction down, and then we'll have that C wave taking us out towards our target skyrocketed range later. So it's not a bad pattern. It's just not as impulsive as maybe we're seeing with other cryptocurrencies that are looking a lot more explosive in the way that they're moving. But XRP is tracking very, very well right now. So good progress has been made. I do expect more volatility. There's definitely some trading opportunities going on here on the smaller timeframes as well as the longer timeframes. But of course, I'm not a financial advisor. I can't give financial advice. All I can do is share my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below. And if you haven't done so already, smash the like button, subscribe if you're new, and check that video out right there. It's not one that you want to miss.